So what are the factors that are driving this interest in impact investing right now?
There's so many forces at work here that are forming the sort of positive alchemy that's driving this market. On the one hand, we've got millennial-driven consumers who are absolutely focused on trying to generate positive environmental and social outcomes today. They're expressing that in the way they behave as consumers. But as they begin to grow their wealth and inherit wealth, they are telling us that they're going to invest it differently and they want to invest it for good. So on the one hand, you've got consumers driving the wave. We also have those who give asset managers money, asking how that money is being invested. Is it environmentally friendly and so on? So you've got that force at work. And then you have an enormous amount of regulatory intervention that is coming into play as well, as politicians, through their political will, are using regulators to try to push companies and asset managers to do more faster, particularly on the environment. So all this together is making it happen for us.
Marisa, you report directly to Credit Suisse's CEO, Tidjane Thiam. So let me ask you how important impact investing is to Credit Suisse's growth planning for the next 2 to 3 years.
Sure. Well, I think it's a statement in and of itself that as we develop this business, it's a direct report of the group CEO. So I think that in and of itself is making a statement about the strategic importance. But as importantly, if we think about some of the trends that are going to affect our business over the intermediate and long term, probably the most profound one is the fact that we're going to face the largest intergenerational wealth transfer in history. And as this wealth moves to from those who created the wealth to this next generation, this is critical for us. So if we don't have a response to this new group of investors that want to invest their money for good, then we're going to face issues. So in part, this is very much, I believe, an investment in the future of the bank.
And in terms of investors who might be a little bit skeptical or not quite ready to jump into this type of investing at the moment, what are you telling them?
So what I say is, if you step back and think about what is smart investing, if you think about the companies that you can invest in, those companies that are more attuned to the underlying trends that are happening in their customer base, if you think about companies that are more nimble and ready to respond to regulatory intervention, and then, as importantly, is the employee base. So companies that have a positive purpose and really can articulate that, they are the ones now that I think will attract the best talent. So if you think about that just as a company matter, who would you want to invest in? You're going to want to invest in those companies. So the companies that have that positive environmental or social aspect to what they do deeply within their strategy, I think are going to be the winners. And I view that as just smart investing, not altruism, just smart investing.
Yeah, and Marisa, broadly speaking, I understand that ESG is focused more on the operations of the company, whereas impact investing takes the focus back to the products and services the company is producing. So give us a couple of examples of the sort of companies that you would invest in as an impact investor.
Sure. I would actually differentiate a little bit ESG and impact, where I say that ESG takes environmental, social, and governance factors into consideration in your investing habits, whereas impact investments are very deliberate. They set out upfront to try to achieve a specific outcome, and then those impact investments will say that they'll hold themselves accountable for delivery of that outcome, and they will measure and report on that outcome. But when we think about the types of companies that are really impactful, that are making real change, I would point you to this millennial-driven consumer as one data point. So a company that I think is incredibly impactful would be a company like Beyond Meat, which of course is getting a lot of press right now. But that is a response to a real fundamental issue that today the way we eat, consume, and sadly waste food is not sustainable. And this company has a real response in a plant-based alternative, which is much more environmentally friendly than perhaps the meat that we've been eating up to now. And just look at the valuation of that company. We brought it at $20 a share, and I'm not sure where it is today, but the last time I checked, it was north of 100 in less than a month. So that just gives you some sense of the energy and the valuation drivers that will be behind these types of impactful companies. And that's just one example. If we think about the enormous energy that is focused on the plastics equation, Every day, I'm seeing so much incredible innovation about trying to find plastic alternatives that are really credible, that are non-toxic to the environment, and on it goes. So these are the types of companies that we're keeping a close eye on.
Marisa, you're heading up a new unit, and we talked about the fact that you've hired 30 people. Are you looking to increase that team, double it? What sort of team might we see in a year's time, briefly?
So we're absolutely continuing to invest in the business, and stay tuned for some announcements that will be coming in the very near future. But we see, as this sector continues to grow, and you referenced the number of about $500 billion is the current view on the market size of impact investing. That's about an 800%, north of 800% growth in just the last couple of years. So if we're going to be anywhere near to servicing that energy with our business, we're going to continue to invest.